Hello. Welcome to our next chapter, that is your IND AS 113, that is your fair value measurement. So, very small IND AS. So, basically, we have to first understand what is your fair value. What do we mean when we say fair value? So, fair value is a price that would be received or paid in an orderly transaction between market participants. That means when two participants are not related to each other, what price would have originally happened in the market? That is your fair value. Whenever we say fair value, it does not exactly mean market value because it is actually market value minus your transaction cost. So whenever in this chapter we use fair value, we mean market value minus your any transportation cost. Okay. So basically, there are two types of market. First is your principal market, and second is your most advantageous market. So how do we define these markets? Your principal market is where that good or service is traded in the highest volume. That is, volume is of importance. That will be your principal market because, of course, if you have more number of transactions for something, it is more easy to find the correct price for it. So therefore, this will always be our first priority whenever we are saying market value. Question comes ki boss, which market? So therefore, we are understanding ki boss, first preference will be given to principal market. Second priority is your most advantageous market. That means the market where you will receive the maximum price for this. Okay. So usually in these markets, since there is not a lot of volume, there would be some transaction cost. So therefore, your principal market is highest volume and your most advantageous market is wherever you receive the highest price. By price over here, we mean fair value minus your transaction cost. There would also be a transaction cost. Fair value, remember the definition, it is market value minus your transportation cost. However, we will record at fair value only. Okay. So this is your fair value. So to identify which market has the highest price, we will do fair value minus transaction cost. Say for example, I manufacture badminton rackets. Now in India, this badminton racket I can sell for 300 rupees, but in US, I can sell this badminton racket for 3000 rupees. So there's a difference. In India, I can do it at 300 rupees. In US, I can sell it for 3000 rupees. And India is my principal market. Or say, or let's say both of these are my most advantageous market. Okay. I have these markets available. But the thing is, when I sell it in US, my transportation charges is only 2800. Duty, flight charges, dispatch, handling, everything. While in India, this is only 10 rupees. So this price comes to 200 rupees and this comes to 290 rupees. So even though my original price in US was higher, but after subtracting my transaction, transportation, all of this cost, it comes to 290. So therefore, India will be considered as my most advantageous market. But we will record it at fair value. So this comparison, only for comparison purpose, we will be subtracting transaction cost. For all other reasons, for recording purpose, it will be done at fair value only. Entity specific restrictions for use of assets shall not be considered while determining the most advantageous market. Say, for example, I have some land. And as per my company policy, I am not allowed to use the land to make a building on it. This is an entity specific restriction. So while determining the price, this we will be ignoring. We will not be considering that boss, we are not allowed to make building. Who cares if we are not allowed to make a building? Question is whether the person who we will be selling it to, are they allowed to make or not? So therefore, if there is any entity specific restriction, that will be ignored. But if, say for example, there is a airport near this land, now this restriction of not being able to make a building, on this land is not just specific to my entity, it is specific to everyone. So therefore, the value of this land will decrease for everybody, not just for me. So therefore, this restriction we will be considering. But if there is any entity specific restriction, that will not be considered. Great. So we've understood where how to calculate the market value. Now is your fair value hierarchy. How do you calculate fair value? So basically there are three types of inputs: level 1 input, level 2 input, and level 3 inputs. So price for identical assets or liabilities. This is basically your active market which requires no adjustment. These are called your level 1 inputs. Basically, as clear as it gets, ekdam identical, no change. If this is in the active market, so this will be considered as a level 1 input. What is your level 2 input? Prices for identical asset or liabilities in non-active market. So even though identical but non-active market, or prices for similar, see the difference is identical and similar. Prices for similar assets or liabilities in either active or non-active market, both of these come under level 2 inputs. So this requires little adjustment, this requires no adjustment. And level 3 inputs is any unobservable inputs for any asset or liability. Okay, so I hope you understand level 1 input, level 2 input, level 3 inputs. Over here it is identical and active market. Over here it is identical but non-active market, or similar, or active and non-active market either. Okay, so basically if the quoted price for, is there a quoted price for identical item available in the active market? So basically this hierarchy I've just put in a chart format. Is there a quoted price for identical item available in the active market? So if you see, this is identical and this is active market. If answer is yes, and if the price needs adjustment, if price does not need adjustment, then it is a level 1 input. If the price needs adjustment, so basically we reach to the same. Any significant unobservable inputs, something that you cannot determine. If the answer is no, then it is a level 2 input. That is, some adjustment is required. If there is any unobservable input, yes, then it is a level 3 input. Same thing, just in the chart format. Okay, easy to understand. And with this, we are done with this IND AS, and I will see you in the next one.